Here we are in the QBO gym. And the QBO gym is a place where we have numerous hands-on exercises that simulate real-life scenarios that you may encounter as a bookkeeper. Each month covers a variety of new topics and scenarios, and to make it a little bit easier for you, we break it down into 4 different sections. So if you are looking to work on your bookkeeping skills, this is the place for you. And if you want to do some of these on your own, do a whole month's worth, be sure to join our free 5-day bookkeeping challenge. All you have to do is click on the link in the description. But let's dive into today's exercise, which is coming from our May Year 1 Strength Training section, where we are really focusing on journal entries. At the top here is an animated video to give you an understanding of what you, the bookkeeper, will be doing for your client Craig this month. Below that is an interactive pre-assessment quiz that relates to the video up above. Under that are all of the exercises in this section. And at the bottom here, after you have gone through all of these exercises and completed them, you will unlock some sample marketing posts that you can use on your LinkedIn to share with everybody what you have learned so far. So let's get into today's exercise where we are going to practice recording payroll. Go ahead and click on that link to have the exercise pulled up for you. I have it over here on the right side of my screen, so let's read through our scenario. Business is growing fast, so Craig has hired a part-time office manager, Emily Platt, and a laborer, John Johnson, to help him keep up. He decided to go with an outside payroll company to take care of everything. They don't integrate with QBO, so they will just be sending over a report before each payroll, which you'll need to manually enter in the books. You'll do this with a journal entry. Then when the payroll checks are cashed and taxes are paid, the bank feeds will match to QBO. Now, to do this exercise, you will need to download the payroll summary. Click on the link under the animated video in this section to download the report for Craig's first payroll run so you can add it to the books. So if you go back to the gym here is that animated video. Below that is a button that says payroll summary. Go ahead and click on that. It will download for you, and when it does, go ahead and open it up. This is what it will look like once you do. Now, you will need to be in the sample company to do this exercise. If you are not sure how to get into the sample company or get your own free QBOA account, be sure to click on the link in the description. I have the sample company here on the left side of my screen. This is the dashboard and what it will look like when you sign in. So let's go ahead and get started with the exercise. Before we get started with recording payroll, you'll need to create the accounts that Craig will be using to track his payroll expenses and obligations. So to do that and create those new accounts, we need to go to the chart of accounts. You'll click on Accountant Tools and then select Chart of Accounts. Accountant Tools is at the top of the screen right here. Click on that. And then under Quick Links, select Chart of Accounts. Now, the first account that you'll need to create is the expense account that will keep track of how much Craig's employees earned or their wages. So to create the new one, we're going to click on the green New button. That is right here. When you click on that, you will get this pop-out screen and it will allow us to fill out the information for this new account. So in the account name field, we're going to type wages expense. That is this one right here. Click into it and then go ahead and type wages expense. In the in the account type field, we're going to select expenses. So click that down arrow, and then you're going to scroll towards the bottom. It's almost the last one. Go ahead and click on expenses once you find it. In the detail type field, we want to select payroll expenses. This is a little bit more specific about what kind of expense it is. So scroll down and you will see payroll expenses. Click on that one. No need for a description or to do anything else here, so we are going to click on the green Save button, which is on the bottom right corner of that screen. And that one has now been created. Next, you will need to create the expense account that tracks how much the employees cost, Craig. These are the things over and above what the employees are actually paid and includes the employer portion of Social Security and Medicare, federal unemployment tax, and any taxes required by the state his employees work in. For more information about payroll taxes and requirements, please see the Intuit Payroll Certification Training under the ProAdvisor tab inside your QBOA account, and or you can look at the Fast and Easy QBO Payroll Certification course found here. You can click on this link right here to get more information about that payroll certification course. But let's continue on with the exercise right now. We're creating that new account. So once again, click on the green new button. In the account name field, we're going to type payroll tax expense. So click into that account name field and go ahead and type payroll tax expense. Once again, this is an expense. So in the account type field, select expenses. Click that down arrow, scroll towards the bottom, and go ahead and select expenses once you find it. In the detail type field, we're going to select payroll tax expenses. So click that down arrow, scroll down until you get to the P's, and then you're going to select payroll tax expenses. And that's why we don't need to add a description here because our account name is self-explanatory. It is the exact same name as our detail type right here. So we are all good here. Let's go ahead and click on the green Save button. And now that one has been saved. All right, so next you will need to create the liability account that you will track how much you owe the employees. This will be their wages minus the taxes we are deducting from their paychecks and submitting on their behalf. This includes federal and state withholding, their portion of Social Security and Medicare, and then any required garnishments. So once again, let's click on that green new button. In the account name field, we're going to type wages payable. So click into that field right there and then type wages payable. This is a liability account. So in the account type field, we're going to select other current liabilities. Click that down arrow. And if you scroll down just a little bit, it's about halfway down. Here is that other current liabilities. Go ahead and select that. And then in the detail type field, select payroll clearing. So click in that down arrow, scroll down to the P's, and you will see payroll clearing. Go ahead and select that. Nothing else that we are doing here, so we are going to click on the green Save button. And now that liability has been accounted. But finally, we have one more liability account that we need to create, and this one will track how much Craig owes the tax agencies. This will be the employer taxes Craig needs to pay, as discussed in the previous steps, plus the taxes you are submitting on behalf of the employees. So once again, click on that green new button. In the account name field, this time we're going to type payroll tax payable. So click in that field, payroll tax payable. In the account type field, once again, we're going to select other current liabilities. So click that down arrow, scroll about halfway down and find other current liabilities. Click on that. And then in the account type field, we're going to select payroll tax payable. So click that down arrow, scroll down to the P's. Here is payroll tax payable, select that. Everything else we are leaving as is, so we just need to click on the green Save button. That's on the bottom right corner. And there we go. We have now created all 4 of those new accounts. So now you are ready to create the journal entry. Journal entries are used when there is no available transaction in QBO, as in nothing is under the plus new button that's found right here. And it's something that works for what you're trying to record. So for payroll, you will need to record a transaction that will, 1, show on the profit and loss report the amounts that have been paid, and 2, show on the balance sheet the amounts that are still owed. The reason we use a journal entry for this rather than an expense is so it will match in the bank feed. After all, what you really paid the employees, their net pay, is not what you paid them in full, which is their gross pay. And when you paid in taxes, and what you paid in taxes is not what you actually owe because it includes items that were paid on the employee's behalf. So creating a journal entry will record all of this information properly. So to create that journal entry, we're going to click on the plus new button and then select journal entry. Plus new button on the top left corner, go ahead and click on that. In the other column is journal entry, go ahead and select that. When it comes up for us, we are going to go ahead and fill it out. The date of the journal entry should match the date the payroll was run. The payroll summary report shows that it is the 7th day of this month. So if I click into the payroll summary itself, you can see it says payroll summary for pay period ending, and it's on the 7th of the month. Now, the reason that we don't put actual dates here, like very specific dates, is because the sample company is always changing their dates and it makes it a little bit more tricky. So for this journal entry, we are going to select the 7th of the current month, the month we are in right now. Now, your date may be a little bit different than what my screen is showing right here, and that's okay. If you are when you are filling this out, you need to choose the 7th of the month. It'll be important later. So for me, that will be May 7th because I am currently recording this video in the month of May. Again, your date may be different depending on when you are doing this exercise. It is good practice to name the journal entry so that you can easily find it later. So in the journal number field, we're going to type the current year, the current month, 07 payroll. So go ahead and delete what is currently there. The current year for me is 2024. The current month is 05 for May, and then 07 payroll. And just as a note here, being as specific as possible in this journal number field is really helpful because if you're looking at a list of journal entries and you're trying to figure out which one you need to look for, if you have it named like this, you'll know what it is exactly, what's in that journal entry without having to click into each one. Keep in mind too that there is a limit on characters, even though this is a huge field, there is a limit in how many characters you can type in here. So just keep that in mind as you're doing this in real life. If you need to create journal entries, good to have a good description, but just know it's a little limited. All right, so let's go ahead and fill it out. First, we will record what we paid out in total in wages. So in the first line in the expense account field, we're going to select wages expense. Go ahead and click into that account field. You can click the down arrow and start scrolling we're looking for an expense account that's wages expenses. There are wages expense, excuse me. So once you find it, go ahead and click on that. Note that we're using the debit column here because we are adding to an expense account. For a more thorough explanation of debits and credits, we recommend watching this video as well as practicing these practice questions. And these are both YouTube videos that are outside of what our company offers that are really great explanations. So if you are looking for a little bit more information, definitely click on both of those to get access to those videos, watch them, and that way you'll get a bit more of a background of what we are doing right here. Also, debits and credits are a topic in our Fast and Easy QBO Advanced Certification course, which you can click on the link right here. There is a link in the description as well. So if you want more information about that and what it would and how it would be tested on that advanced certification course, then be sure to click on that link as well. But let's go ahead and continue on with the exercise. In the debits field, we're going to type 576.92. And that is because we are looking here and that is what is in that gross pay, that 576.92. So in the debits column, go ahead and click into it and type that amount. Next, we will record Craig's employer taxes. Remember, this does not include the taxes that we are transmitting to the taxing authority on the employee's behalf. So on the second line in the account field, we're going to select payroll tax expense. Click into it. This time I'm going to type it so that it's a little bit easier rather than trying to have to scroll through it. And I want that payroll tax expense, that expense account. Go ahead and click on it. Now you'll notice that as soon as you select that account, QBO automatically assumes that the credits amount should be the same as the debits amount from the first line. And this is because debits and credits must always equal each other in order to have a properly filled out journal entry. You can see that right here. This is what we had in that debits field. And so it's just assuming that we want the same amount in that credits field. But we can always make the adjustment in this field to match the summary. So in the debits field, we're going to type 65.20. So if you click into it, type $65.20. And if we go back up here, you will see that, let me see, 65.20. Here it is right here. 65.20 is that addition of those, the amount right there. All right, so after we do that, you will in the after typing 65.20 in the debits field, the amount that QBO had assumed was the credits amount from before, that 576.92 will remain. However, this will automatically disappear when you click the tab key or anywhere else to exit out of that debits field, which is what I had done right there. So it's disappeared. And so now we can continue on with filling out the rest of the journal entry. Next, we will record what we will be paying total in taxes. This includes Craig's portion as well as what he is paying on behalf of his employees. So on the third line in the account field, we're going to select payroll tax payable. I'm going to click into it and once again start typing so that I can easily find it. There it is. It's that other current liability account. Once you find it, go ahead and select it. And again, QBO will automatically assume that we are wanting to add a balancing credit for the full amount. Just delete the number and replace it with what is in the summary. Note that we are also using the credit column here because we are adding to the liability account. All right, so in the credits field, we're going to type 161.80, so $161.80. And if I go back to the summary right here, we see that as the total tax liability showing right there for $161.80. All right, so finally, the calculated balance should equal the net amount that we will be paying the employees. The net amount is right here. And this is the total wages and payroll tax expenses minus the payroll tax payable. So on the fourth line in the account field, we're going to select wages payable. So click into that. I am going to once again start typing wages to have it easily pull up for me. Here is wages payable. Once you find it, go ahead and click on it. And once again, QBO will automatically calculate the credits on this line to equal the debits column. Confirm the number is correct and matching what is on the summary. So that is that $480.32, and that is exactly what we see here for that net pay. So we have filled out this journal entry, so we can go ahead and click on the down arrow next to Save and New and then select Save and Close. The down arrow is right here. Click on that and then select Save and Close. And the journal entry has now been saved. In our scenario, Craig has hired the payroll company to do all of the payroll calculations for him, and then he is responsible for writing the paychecks and paying the taxes. While this could be a service the payroll company provides in a real life scenario, it's more likely that they will take care of actually paying the employees as well, either by direct deposit or by a check they are authorized to cut from Craig's account. You would then create an expense to match the net amount for each paycheck. But for the purposes of this exercise, since Craig's business is so small, we will assume that Craig is writing the checks himself to his two employees, Emily Platt and John Johnson. So let's go ahead and fill out that check transaction by clicking on the plus new button and then selecting check. The plus new button right here at the top left corner, click on that and then under vendors, select check. Once it comes up for us in the payee field, we're going to select Emily Platt. So click in that down arrow. You can either scroll, I believe it's towards the bottom. Yep, it's at the very bottom of this list is Emily Platt. Go ahead and click on her. In the payment date field, we're going to select the day that the check will be cut. According to our payroll summary, the pay period ended on the 7th, and so we would enter the 8th here. So in the payment date field, we're going to click on the 8th of the current month. Again, your date may be different than depending on when you are doing this exercise. For me, the payment date would be on May 8th. So click on the calendar icon to have it pulled up for you. Select the 8th of the current month you are in. On the first line in the category field, we're going to select wages payable. So click into that field right there. I'm going to start typing in wages rather than scrolling. So we're going to click on that wages payable, that other current liability account. In the description field, we're going to type pay period ending and then the date that you are using. So for me, I'm going to type in that description field, pay period ending, and then for me, it is 05/07/2024. Again, your day may be different. Your date may be different depending on when you are doing this exercise. In the amount field, we're going to type $232. So click into it, $200.32. And I believe this summary is just the summary. It's not the actual breakdown of it. Oh no, there it is right there. Emily Platt had been paid $200.32. All right, so now that we have created the check transaction for Emily, we're going to do the same for John. As a quick note here, this check number, this is just QBO automatically bringing up what would be the next check number. If you need to adjust it based off of the check that you have, you could always do it here in this field. All right, so let's go ahead and click that down arrow next to save and close and then select save and new so that we can fill it out for John Johnson. So click the click the down arrow and then select save and new. And that check for transaction for Emily has been saved, and now we're moving on to John Johnson. And if you notice, that last one was for check number 71, and now this is check 72. QBO is just assuming that this is the next check number that we are using, but again, make sure that it's matching whatever the check is in real life. So in the payee field, we're going to select John Johnson. So click the down arrow and then scroll all the way to the bottom. He should be the very last one on the list. Click his name once you find it. The checking account is going to stay as is because that is how Craig is paying for paying their checks, where it's coming from. It's coming from the checking account. In the payment date field, you want to click on the 8th of the current month. Now, this day may already be selected. And mine is, and that's just because I had done a save and new. So I don't need to do anything here. If for whatever reason yours is not showing the 8th of the current month, be sure to make the adjustment. Let's go ahead and fill out the rest of the transaction. So on the first line in the category field, we're going to select wages payable. Click into that box right there. I'm going to start typing wages to have it pull up easily. And that wages payable, that other current liability account, click into that. In the description field, let's go ahead and type pay period ending and then the date we're using. So click into that field, type pay period ending. For me, it is 05/07/2024. Then in the amount field, we're going to type $280 because if we go back to this summary, here is what John Johnson got for $280. So click into that amount field, type 280. And now we have finished this check transaction. And so let's go ahead and click on the down arrow next to save and new to select save and close. So click that down arrow and then click on save and close. And now that check transaction has been saved. Now, finally, let's see how this payroll activity has affected the reports. We're going to go to the reporting center. So on the left navigation bar, click reports. That is over here on the left side. It's about halfway down. Go ahead and click on that. We're going to go ahead and click on balance sheet. So that is in the favorite section. It's also in the business overview section. Go ahead and click on it. In the report period field the report period 2 field, we want to select the date matching what is on the journal entry. So it should be the 7th of the current month. So click into this report period field, this 2 section right here. Click the calendar icon, and then you want to click on the 7th of the current month. Go ahead and click on Run Report. And you'll notice that the payroll tax payable and the wages payable are reflected under the other current liabilities section. Until Craig pays taxes and records the checks, these will still be owing. So if I scroll down, here are the liabilities, here are other current liabilities, and here are those payroll tax payable and wages payable that we just filled out on that journal entry. They are both showing right here. Now we're going to change the report period field to the date of the paychecks. So in the report period 2 field, we're going to select the matching, what is matching on the paychecks. So this would be the 8th of the current month. So go back up to the top. In this field, go ahead and click into it, click the calendar icon, and then select the 8th of this current month. Select the Run Report button. And now the wages payable account is now showing as 0 because employee checks have been recorded. Once the taxes have been paid, the payroll tax payable account will reduce as well. So I'm going to scroll back down to where we were, and here you can see that wages payable is showing as 0. Note that the amount of the payroll tax payable liability is $161.80. This is how much we will be paying to the taxing authorities. Now, for more information about payroll taxes and requirements, please see the Intuit Payroll Certification Training under the ProAdvisor tab inside your QBOA account, and or the Fast and Easy QBO Payroll Certification course found here, clicking on this link. It's the same information that I mentioned earlier in the exercise, but just to reiterate, if you want more information and just a little bit more of a deeper dive into these topics, that would be the place to go, either Intuit's training center, or if you wanted to look at our payroll certification course. All right, so let's go back to the report center and run a profit and loss report this time to see how it has affected as well. We're going to click on back to report list. So if I scroll back up to the top here, and then I'm going to select back to report list. And this time I'm going to select profit and loss. It's also here in the business overview section. Go ahead and click on it so that we can have the report run for us. Now, depending on when you are doing this exercise in the month, the year-to-date report period may not include the payroll date. So to ensure that it is included on the report, change the end date to what is matching on the paychecks. So again, in that report period 2 field, we're going to select the date matching what is on the paychecks, which should be the 8th of the current month. So go ahead and click into that. I'm going to click on the calendar icon and select the 8th day of the current month. Again, your date may be different depending on when you're doing this exercise. And then clicking on the Run Report button. So click on that Run Report button. And now this time, notice that the total payroll tax expense, that's $65.20, does not equal the total of our payroll tax liability, that $161.80. And this that's because the liability includes the amounts from the employee's gross pay that we are transferring to the taxing authorities on their behalf. So if I scroll back down, here is the expenses accounts. And if I am looking for the payroll tax liability or payroll tax expense, if I scroll down a little bit further here, here is that payroll tax expense for $65.20. Notice too that the total wages expense, that $576.92, is the gross amount that the employees earned, not the net amount that the employees actually received. So the total of the 2 paychecks was $200.32 plus the 280 is $480.32. That is the amount that was actually received between John and Emily. And you can see that wages expense right here, that's $576.92. But that is it. That is how you would record a payroll journal entry and then all of the reports to show you how it is showing up in those reports. Now, if you like this exercise and you'd like to do more like it, be sure to join our free 5-day bookkeeping challenge. All you need to do is click on the link in the description. If you'd like to move on, be sure to leave this session of the sample company open, as you will need it for the next exercise in the strength training section, where we record an asset purchase journal entry. And I will see you in the next video.